This is your LMAX Exchange technical update for Monday, August 21st, 2017. Euro dollar. So the market has been consolidating off of recent 2017 and plus 2.5-year highs at 119.11. And the question right now is if this is a bullish consolidation ahead of fresh upside beyond 119.11, or if we're seeing a bearish consolidation in favor of a more significant correction. Certainly with weekly technical studies overbought, there's room for additional declines before this market reasserts in this uptrend, and there's room for these declines to extend down towards the 115 area, which roughly coincides with the 50-day moving average and is also a measured move extension if we break down below 117 following this 119 to 117 consolidation of 200 points, taking us 200 points lower to the 115 area. If we, however, are unable to establish below 117 and the market pushes up to a fresh 2017 high, it would open a 200-point projected upside towards the 121 handle. So again, it's a bit of wait and see right now, but certainly with those technical studies overbought, there is risk that we do see additional declines in this market towards the 115 area. Sterling dollar. So cable has seen some setbacks over the past several days after the market put in a 2017 high up at above 132 and closer to 133, but there is risk now for a little bit more decline here towards that previous range resistance from earlier this year around 127.75, and the market really could trade into the 127s before putting in a base. Ultimately here, the breakout that we did see above 127.75 back in April does suggest that we've seen a significant bullish structural shift, and that that plus 30-year low from October of 2016 at 118.40 is a major low in a cycle that should lead to higher market here over the coming weeks, months, and potentially years. And so if we do see setbacks over the coming sessions, they should ideally be supported in the 127s with only a break back below 125.90 to delay this constructive outlook for sterling dollar. Dollar yen. So the market is continued to trade down after stalling out above 114. We have seen a range trade this year between 114, that 114 area, and 108 down below, and so there is still risk that the market wants to take out that 108.13 or test that 108.13 2017 low before either considering another bounce in adherence to this range or potentially breaking down below 108.13 and below 108 to open the door for potentially a more pronounced decline in this major pair. So it'll be interesting to see how things play out here over the coming sessions. If the market reverses higher and establishes back above 111, that would be a sign that we're seeing a resumption of this range trade that could lead to a more accelerated move back up towards the 114 to 115 area. Euro Swiss. So Euro Swiss has been happy chopping around over the past several days since the market pushed up to a 2017 high and also its highest level since January of 2015, up above 115. Technical studies at that time were highly extended, and so it hasn't been a surprise to see the market pull back and consolidate over the past several days. There is still risk that the market wants to trade a little bit lower now into that 110 to 112 previous resistance now turned support area here before ideally putting in some form of a higher low now and continuing through 115.40 up towards the 120 handle in the days and weeks ahead. Again, the breakout that we did see earlier this year or several days back above the 110 and then above 112 did set up a bullish structural shift, and that's why we say ideally now when the market is pulling back into this area, it puts in a higher low to show that this market has in fact broken out to the top side. Aussie dollar. So Aussie has been showing signs of a potential top over the past several days, with the market topping out by that 2017 and plus 2-year high above 80 at 80.66. And so we have seen a bit of a bounce out from the 78 area, but look out for the market to put in a lower top here ahead of a continuation to the downside with a break back below 78 to open the door for a move potentially that could take us down towards the 75 area. Dollar CAD. So dollar CAD is pulled back after seeing a nice correction off the 24 area 2017 and plus 2-year low with the market trading all the way up to 127.80 ahead of this pullback. There is risk that the market does look to put in a higher low here because the move that we've seen going back to May of 2017 when the market was trading at a 2017 high all the way down to this recent 2017 low, this has been a considerable move of about 10%. And so there is risk still for these what was severely extended technical readings to still show signs of unwinding and opening the door for a more pronounced correction higher at a minimum in this market, back towards the 129.40 to 130 area. 129.40 is the 38.2 fib retracement off the 2017 high to low move, and 130 is a really nice psychological barrier and previous support now turn resistance. But the market does need to show signs of putting in a higher low here and should hold above 125 if this is going to be the case. In favor of that next upside push. A push back above 127.80 would then confirm the higher low and open the door for that move towards the 129.40 to 130 area. Kiwi dollar. So the New Zealand dollar has been showing signs of topping out over the past several days, with the market pushing up above 75 to a 2017 and plus 2-year high to 75.58 ahead of this latest set of declines. There is risk, however, that this market continues to be well capped from here, with any rallies that we do see in the sessions ahead well capped ahead of 74 or market remaining on a close basis below 74 in favor of that next downside extension back below the 72 area, opening the door for a potential drop all the way back down towards some range lows over the past several months, which come in the 68 area. SPX 500. The S&P 500 has pulled back in the previous week, and this could set the stage for a drop below major support at 2400. If the market can break down below 2400, it will be interesting to see if we get a close below 2400 on any day this week. And if we do see that happen, it could finally set the stage for a potential bearish structural shift in this market, opening the door for an even more pronounced decline in the weeks ahead. At the same time, if the market is unable to establish below 2400, the pressure remains on the top side, and we could see another push back towards and above the recent record high, just shy of 2500. Gold. So on Friday, gold decided that it wanted to push up to a fresh 2017 high and finally take out what had been elusive resistance at 1300. The break above 1300 now does suggest that the market is going to be poised for the eventual break higher towards a retest of the 2016 peak at 1375 further up. Any setbacks that we do see over the coming days should be very well supported, ideally well ahead of 1240, but ultimately with this market, while it holds above 1200, the structure is constructive and dips are expected to be supported with only a break back below 1200 to negate this constructive outlook for gold.